Hey, my name is Tucker Kraus, and welcome back to my channel. In today's video, I got another news update for you guys, so let's not waste any time and get right into it. Alright, Russia and China to issue a new global reserve currency during the BRICS summit, and so that includes Brazil, Russia, India, China, and South Africa. Putin announced plans for a new global reserve currency. And I should also note more countries are trying to join BRICS too, and analysts believe it's an attempt to undermine the US dollar, and that's of course because Russia's been kicked out of the whole global financial system. China and Russia as well just aren't getting along at all with the US, so why would they want to continue to use the US dollar for most international trade? Plus, we're seeing, China's been getting rid of their US dollar reserves like crazy, as well as, Russia's been buying a whole lot of gold lately, and so that goes with, they plan to back it with commodities. The exact choice is unknown. Russia's been buying a ton of gold, so it could totally be gold. Plus, gold has obviously backed a lot of currencies previously, though, in general, it is currently planned to be backed with some sort of commodities, since that's, of course, where these countries' strengths lie, is in their natural resources. Cameco earnings report smashes expectations. So, bottom line, positive. Cameco posts an EPS beat and maintained 2022 production and revenue guidance, and they signed £5 million in new U308 long-term contracts, booking a total of £45 million a year to date. So the focus points. So sales volumes total £7.6 million at an average realized price of $46.30, which is 7% increased quarter over quarter, so driving that EPS of 18 cents, which was way better than their consensus of negative 1 cent per share. So they absolutely smashed on EPS, although they came in a little bit short on cash flow per share, as consensus was 30 cents compared to 25% reported. So, term contract update, Cameco signed an additional £5 million in new long-term contracts, bringing the total volume booked since January to £45 million, and the company continues to be patient and strategic in the signing of new long-term contracts. Now, uranium market update, Cameco noted that while the focus of utilities currently lies higher up in the nuclear fuel cycle, that's of course with things like enrichment, this will eventually transition to uranium oxide to create an environment where Cameco is best positioned to capture value, right? So the uranium miners themselves. And so these guys are maintaining their buy rating. And so overall, that's definitely good news for the market that Cameco is, doing really good on their earnings, since really they're the only company in North America that's really, truly, like a company that's producing and doing things. Of course, there are a few other uranium companies that have like a tiny ISR project going, but really it's just Cameco, so this is definitely notable. Alright, so of course we also had the FOMC meeting this week, and so FOMC meeting, not a pivot, and there was a unanimous vote to raise interest rates by 75 basis points, placing the federal funds rate at 2.25 to 2.50%. And so, ignore the name here, this is a great Twitter follow either way though, absolutely do go give them a follow. Phenomenal. Alright, there is a narrative out there that Fed is pivoting because of data dependency. This is another typical macro tourist spread by usual accounts. JPow opened the door to 75 basis points in September while acknowledging recent weakening in data. There was no ambiguity on priority inflation. To keep going through the thread here, what added to confusion was his reference to current FFR as neutral. He did say in previous meetings that this is theoretical concept on which no one agrees and they will be driven by facts versus models. The message is clear. They need to go into restrictive territory. Until the significant drop in headline CPI materializes, that overshoot versus neutral is currently misunderstood and badly mispriced. It will be much larger. Market rally was expected and can be fully traced back to positioning and CTA triggers. There is no ambiguity. So essentially what he's saying here is, yeah, this is what the Fed said. A lot of people on Twitter are saying this is clearly the Fed pivot because they're acknowledging that the economy is weakening and that they're going to have to turn on the money printer again. But of course, that's not what actually happened. They're still very, very clear about inflation being their top priority. Not to mention, of course, even if they go from 75 to 50 basis points in September, for example, that's, of course, still not a pivot because 75 basis points is still a larger hike than they normally do, right? Normally, 25 basis points is kind of the standard. And so, of course, they've been hiking at light speed. And so, if they do slow down hiking a little bit, that still doesn't show that they are pivoting. But no, we go back here, right? It's just the Fed is now kind of being realistic here, right? They're acknowledging, yeah, the economy's starting to weaken, but of course, inflation is still their number one priority. And so, of course, right back to this tweet, I'm kind of just jumping all over the place here, that the FFR being neutral is essentially the idea that the federal fund rates would match what the usual economic growth is, which is usually about 2 to 2.5%, which is where we now are. And so that's essentially the idea here, that now the FFR is generally going to be in a non-accommodative state, nor is it going to be in a restrictive state. But because inflation's still so high, it's likely that JPow is still going to push the Federal Reserve into restrictive territory. Alright, I jumped around a whole bunch there. Hopefully that all made sense. Essentially, they're not pivoting yet. we're going to have to keep watching what the Fed says. Alright, just quickly, US officially enters a technical recession. Q2 GDP negative 0.9%, expected was 0.4%. Let's move on. Alright, so personal spendings and income beat expectations. So US June personal spending month over month was 1.1%, expected was 0.9%, and May was 0.3%. US June personal income month over month was 0.6%, expectations were 0.5%, and May was 0.6%. So, great, beats across the board. This is amazing, guys. The economy's still strong. Not really. Adjust that for month over month CPI that we saw in June. Well, spending was down 0.2% and income was 0.7% down. So of course, not actually very good at all, is it? Especially if spending is increasing faster than income. Combine that with the fact that personal savings rate is continuing to collapse. That's of course alongside, consumer credit going way, way, way up. That's of course just terrible for the consumer all around. We can see right here. Consumer is donezo. Personal savings rate collapsed to 5.1%, lowest since August 2008. Entering the recession with zero cash buffer, and we can see that chart right here. So of course, everything all around, not looking too good when we look at some of these metrics here. And of course, to the Fed, again, if they're still not going to pivot, that's probably not going to help the situation. Though of course, inflation is still their number one priority, right? Because they could go look at a data point like this. We can see that, oh, this stuff's still strong because it's beating expectations. At the same time, the inflation's still too high. They could look at data like that, though they could also look at data like this that shows we are in a technical recession. So once again, we're going to have to keep watching to see if they pivot or not. Alright, and lastly, mixed big tech earnings. Earnings were generally positive, though many ARK style stocks are beginning to collapse. Could be a sign of what to come. And I mean that, of course, they've already been collapsing in stock price for a while, but now their earnings are starting to just collapse horribly as well. And so we can see right here, just for an example, median real revenue growth for FAANG stocks, so adjusted for CPI, we can see has officially turned negative for the first time in almost 2 decades. We can see that right here. FAANG, of course, is Facebook, Amazon, Apple, Netflix, and Google. Now, I should also note, though, is that the earnings were still generally positive, though it wasn't like everyone smashing earnings across the board. You'd see a company, oh, we beat EPS, we beat revenue, but we're guiding down. Oh, we had record high profit margins and a great EPS beat, but our revenue's down and we're guiding down, that sort of thing. So we'll have to see if, of course, like now we're seeing some of these ARK stocks collapse with their earnings, and we'll have to see if earnings continue to weaken as the economy continues to weaken. This is not financial advice. Do your own research. Thanks for watching, and I will see you next time.